we did have yet another rate cut from the Reserve Bank, with the cash rate now down to the all-time low here of 0.75%. The RBA is worried about flat wages growth and growing geopolitical risk everywhere you look, really. The government has responded to the RBA decision with another bash at the major banks for not passing on the cuts in full. But is this the right way to go? And should the government be doing more to stimulate the economy?
Indeed, these are good questions for Finance Minister Mathias Cormann, who became Australia's longest-serving Finance Minister last week. Well, I spoke with the Minister from Perth and I asked him first about the highlight of his experience over the last 6 years.
Obviously, when we came into government in September 2013, we were faced with a pretty challenging fiscal and economic situation. The economy was weakening, unemployment was rising and the budget position was rapidly deteriorating. So really, the focus straight away was on implementing our plan to turn that situation around. And, employment growth has been, very strong under our government. The unemployment rate has come down and it's certainly well below where it was anticipated it would be. And we've certainly got the budget under control through, disciplined control of our spending growth, more disciplined control of our spending growth, to the point where, of course, the final budget outcome for 18-19 showed that we returned to balance, budget balance.
Well, certainly the government has made a great deal about the return to surplus, which of course is expected this year. But wouldn't you concede that part of the reason that we might have a surplus is actually a large increase in government taxation revenue? As a share of GDP, it's gone from, I think, in 2013, 22.5% to almost 25% last financial year.
Well, we've always been very disciplined on the revenue side of the budget in imposing, of course, a cap of 23.9% as a share of GDP in terms of tax revenue as a share of GDP on ourselves, something that our political opponents refused to do. And, of course, they went to the last election with a threat to increase the tax burden as a result of policy decisions by $387 billion. I mean, we have been reducing the tax burden through our policy decisions. In particular, of course, more than $300 billion worth of personal income tax relief that we have legislated through the Parliament over the last 2 years, as well as significant tax relief for business, in particular small and medium-sized business, and getting rid of the mining tax, the carbon tax, you name it. I mean, over the last 6 years.
Well, just in terms of those tax cut for households, if I could just interrupt there, yes, certainly it is $300 billion over 10 years, but the bulk of those cuts don't really take effect for 5 years. Are there any circumstances under which you'd bring those tax cuts forward, say if the economy started to weaken dramatically?
Well, obviously, I mean, we've made judgments based on, what we thought was economically necessary and responsible, and what was fiscally affordable and sustainable. Obviously, we've got a series of objectives. We want to ensure that Australians have the best possible opportunity to get ahead, to have the right incentive and reward for effort, and to ensure that our tax settings help underpin strong economic growth into the future. But by the same token, we want to ensure the budget returns and remains in surplus, and at the same time as we are also, of course, boosting funding for schools, hospitals, national security, you name it. So, we've phased in income tax relief for all working Australians in a way that is economically necessary and fiscally responsible. And, we have prioritised low and middle income earners in the first instance. And about $19 billion worth of income tax relief has already been paid into people's bank accounts in the first 2.5
There's not much sign that that money is affecting the economy yet, though, is there? I mean, we saw retail sales this week, and they're still pretty sluggish. They were lower than economists expected. Do you worry that we won't see the pickup in growth this quarter that the government is surely expecting?
Look, I mean, obviously $19 billion worth of income tax relief will have an effect in terms of, stimulating the economy, and retail figures in August, were significantly stronger than they were in July. So, I mean, we will obviously, assess the third quarter national accounts data when that is reported in early December, and we'll continue to assess all of the economic data and information and make judgments about, what is required from there on in.
Now let's talk about the biggest issue of the week, and of course that is the Reserve Bank's third interest rate cut this year. The cash rate now, I think, at 0.75 is about a quarter of what it was during the financial crisis. Does that concern you?
Well, I mean, obviously, monetary policy is entirely a matter for the Reserve Bank. It's a very important feature of our system that the Reserve Bank acts independently, assesses all of the economic information and data independently. It's not for me to provide a running commentary. We respect the decisions that they make. They make the decisions, obviously, within the framework of their mandate. We take responsibility for fiscal policy, and the Reserve Bank takes responsibility.
But surely, as Finance Minister, you can have some sort of view, say, on quantitative easing. I notice former Treasurer Peter Costello in recent days has said that that would be an unwise position, in his view, for the Reserve Bank to take. What do you make of that view?
Well, former treasurers are at liberty to express views, obviously in a different fashion than currently serving treasurers or finance ministers. As far as I am concerned, as Minister for Finance, I've got responsibility as part of the economic team of the government that is currently taking responsibility, of course, for the economic management of our country. In terms of the fiscal side and macroeconomic matters and the like, we leave monetary policy entirely to the Reserve Bank. It's not up to me to provide.
What about the fact that the major banks, the big four banks, have only passed on something like half of the official cut in the cash rate? Does that concern you?
Well, I mean, yes. I mean, that's disappointing. We would have liked to see the banks pass on the cut in the official cash rate in full. I mean, that is something that we've clearly, that's a very clear position the government has articulated in recent days, and I mean, we would still urge the banks to reconsider their decisions in relation.
And so, therefore, you don't care about depositors, because obviously, if banks pass on the full cut, then that also means that deposit rates go down by the same amount.
Well, obviously, when there is a reduction in the official cash rate, we would like to see that passed on in full. To those, to those who have got home loans through the banks. I mean, that is the appropriate thing to do. I mean, the Reserve Bank has been very clear in its assessment. The cost of funds has significantly reduced for the banks. But I mean, ultimately, the banks are independent. I mean, they're private businesses and they make their own judgments. But we've expressed our view, and that's very clear.
Now, the government has recently announced a review into the superannuation system and, in fact, the retirement system more broadly. Now, you must have done that because you see some possible flaw in the system. What do you see as the major flaw in the super system?
No, you're quite wrong. That is actually not the motivation behind it. I mean, the reason we're doing it is because this is one of the outstanding recommendations in the Productivity Commission review, that such a review is conducted, and compulsory super has been in place now for 27 years, and I mean, this is designed as a fact-finding, it's essentially a comprehensive review across the entire retirement income system, including age pension, compulsory super, voluntary savings, to establish a fact base that will help inform public debate into the future.
Now, certainly the government is still on the record as supporting the Labor Party's increase in the SG rate from 9.5% to 12%, which of course was legislated under the Rudd government. Why would a Liberal government or a coalition government support such an expansion of government and such a reduction, if you like, in people's take-home pay?
Well, we keep faith with the commitments that we make to the Australian people. I mean, we went, obviously to the 2013 election and to subsequent elections, making very clear what our position would be in relation to the increase in the rate of compulsory super. We did, of course, delay the increase, and it's now only taking effect. I mean, it's only going to reach the 12% by 2025. That was part of course, legislating the repeal of the mining tax. But, we made commitments to the Australian people. The Australian people want to see certainty and stability in terms of policy settings when it comes to superannuation, and that is something that we respect.
One final question on tax. Now, the government has obviously put to bed, if you like, the company tax cuts. That's going to be stalled at 25% just for some companies. But what about the prospect of some sort of investment allowance? I know the Treasurer flagged this recently.
Well, obviously, I mean, we've got a half-yearly budget update later this year, which is just an update. The next budget is due on the second Tuesday in May. And, as much as you might like me to announce our next budget on your programme, I won't do that. There's a whole range of things that are, up for consideration. We'll be reviewing all of the data, all of the potential options to adjust policy settings to ensure that we put the Australian economy on the strongest possible foundation trajectory for the future.